Harry, good to see you again, man.
Round two.
Round two. The last show we did was very popular. Always happy to talk to you. You're one of my favorite humans in the whole world. And now I'm Bitcoin mining again.
Congratulations.
Thank you. That was a very cool way it happened. Compass got in touch and said, we'd like to sponsor the podcast. And we'd like you to mine with us. And I was like, okay, well, let me buy some equipment and let me get back mining. It was a very different experience from my last time.
A little more white glove.
Oh, God, dude.
And just disclosure, I'm an investor and an advisor in Compass. So,
well, okay. And just full disclosure, they're a sponsor. People will know there'll be an ad before this. But what's happened, it's probably been one of my most successful sponsorships ever because I'm getting so much inbound from people saying, wow, tell me about Compass. Like, what's the deal? Are they legit? Can you cover mining? So I think we need to do a 101 on mining. I've got so many questions. I've got my 5 S19s powering away.
They're beasts.
They're amazing.
Yeah.
Apparently. I mean, I just logged into my Luxor. I was like, yeah, I mined some more Bitcoin today. And I'm going to I'll tell you later why I'm mining, but I think it's useful to do a 101. People want to know all about it. There's no one else I'd rather do it than with you. And we can get into a whole bunch of other shit. But good to see you. Are you well?
I'm great. We're in, we're mining Bitcoin. This is it feels like the middle of the bull market. I think that we've held up really well. I think that, Bitcoin has never been in a more, Bitcoin's a word that everybody knows now.
Yeah.
Even in 2017, that wasn't obvious. It was like this weird niche thing that one person in every office was into it.
Yeah.
Now it's central. You log into CNBC and Coinmetrics is on the screen.
Mm-hmm.
You go into any sort of macro update. Bitcoin is considered one of the the inflation hedge risk assets that gets talked about as a normal piece of discussion. And I think that, obviously we can go into some of the ESG stuff that's out there, but the ESG discussion, people are talking about proof of work and consensus and mining. And, this is some of that's positive, some of that's negative, obviously, but we're in a very different part of the public consciousness that I think is super compelling.
It's fascinating. So I brought this up a while ago when people asked about how do we get Bitcoin mass adoption? I said, well, look, we have mass awareness outside of some obscure tribe in the Amazon jungle. Everyone fucking knows about Bitcoin. Like, there's never a scenario where somebody says to me, what do you do? And I was like, oh, I've got a Bitcoin podcast. And they say, what's Bitcoin? Like,
exactly.
Everybody's heard of it. And if they're not holding Bitcoin, maybe they're holding Dogecoin or something else. But like, we have a lot of people interested in this space, and it's getting political now. We have a country that's made Bitcoin legal tender. We have pro-Bitcoin people in Congress here in the US. We have Senator Lummis. We have Warren Davison. We've got Mayor Francis down in Miami as well. Ted Cruz.
The Ted Cruz doesn't get nearly the credit he deserves for that speech.
Yes. I wonder how much he cares, but fuck it. It's a very Texas idea.
Exactly. What he did was he saw innovation happen, and regardless of whether or not it's his ideology or his interests or whatever, he saw a new idea come to market, and the immune, the old world, congressional immune system tried to kill it. Out of default, out of knee-jerk reaction. And he said no. Not because he loves the idea necessarily, but because the idea of killing things out of knee-jerk reaction is wrong.
It's kind of mind-blowing because Senator Lummis is amazing.
Yep.
Yeah. Warren Davison's incredible guy. Yeah. But Ted Cruz is like next level politician. Like, everyone has heard of him. Everybody knows who he is. And I see there's like these international dominoes, of which El Salvador's one, and then the US is so important. US, it tends to drive like global regulations, right? and we have dominoes falling here as well. So it's super interesting. I was down. Parker Lewis hosted a Bitcoin mining event down in Houston, which was incredible. Like, it's big shout out to everything Parker's doing.
Yep.
That was incredible. Like, the mining thing. Mining was a thing. It's been a thing like back in 2017. Right now, it's like a huge topic of conversation because I think a lot of companies have realized, like, actually, this is big business. We can get into this. This is, the oil and gas people down in Texas. And also, I really like the way a whole bunch of the hash rate is now growing here in the US.
Yeah, it's growing here organically, right? This isn't necessarily, folks who had to shutter in China just sending their rigs over here and hosting it here. This is American DNA companies building out rack space, self-directing their hash, saying that this is going to be a core infrastructure business here. And we're going to build it from the ground up. Griid is obviously doing that. We've been doing that. But just to see how broad, the interest in engaging with this as a core business line, it's huge.
Well, I'm getting a lot of emails about this. And look, my audience now is like done a 5x while the Bitcoin price has gone up. There's a bunch of new listeners. They maybe don't really truly understand mining. I think it's good to go back. I've got loads to talk to you about, but we should do a 101. Let's give all the basics. Let's explain what it is, allow people to understand what miners do, the role they play in Bitcoin, and then we can get in some of the intricacies and then some of the debates around some of the more interesting topics. But I'm just going to, like, off the bat, just explain what Bitcoin mining is. You take us away.
Yeah. So I think it's important to talk about how Bitcoin functions. At a not overwhelmingly technical, but reasonably technical level, is that, the way that Bitcoin works is that you continue to add blocks to the end of a chain. It's called a blockchain. It's very literal, where the specific details of the prior block are cryptographically included in the following block, so that every time that a new block is added, the honest behavior of the transactions in all of the history of the previous blocks is continuously validated. So this is important because you hear these words like distributed ledger, or Bitcoin is triple entry bookkeeping, or these are memes of the industry. It's important to understand that Bitcoin fundamentally is a database that tracks values moving across accounts. And it does this with something called the UTXO set, the unspent transaction outputs, which means that every time Bitcoin is moved, all of the inputs result in an equal number on Bitcoin basis of outputs. So this is why the 21 million hard cap is enforceable. This is why Bitcoin is able to achieve transaction finality. When you send it, there's no chargebacks, there's no backseas, there's no rollbacks, there's no forking it out. Like, Bitcoin works as expected. And that's something that we, 12, 13 years into this experiment now can take for granted, but is an enormous innovation. And so, we really have to think, super, super carefully about the 21 million hard cap and the transaction settlement finality and how those are enforced. And those are enforced in this beautiful relationship between the proof of work consensus mechanism and the node validation. So Bitcoin is a system that adheres to rules. And the way that it adheres to rules is with what I call like maker checker. So the miners process the transactions by putting together a block, and then think of that like a 1,000-piece jigsaw puzzle. Really hard to put together if you've ever done one. Take forever. But they're really easy to see if they're done or not. So the miner does this really challenging task of putting together a 1,000-piece puzzle, and then they hold it up, and all the nodes get to look at it. And the nodes are able to say yay or nay. It behaves by the rules or it doesn't. The maker versus the checker power dynamic is really important when you think about things like the block size debate in 2017, when you think about the inclusion of Taproot more recently. So the miners are very responsible for a day-by-day performance of the network, but they are not the power center of the ongoing development of the software. So this is a little bit wonkish, and I know we're trying to do 101, and this might not be quite there, but it's important to understand that while miners are critically important to the system, they are not, we are not the court system of Bitcoin. We are not the enforcement mechanism. The nodes are, and the nodes are the most decentralizable piece of the system. And so the brilliance of the design is that the most decentralizable piece is where all the power sits. So what miners do is, we dig the ditch. We do the hard manual labor of putting together the computing power and directing that computing power to continue to process transactions. But the processing of transactions is really sort of a byproduct. Really what we do is we make sure that the ongoing performance of the system is abiding by the rule set that the nodes enforce.
Okay. We're going to break this down even simpler.
Yeah.
So the way I understand it, I mean, look, the separation of, we're talking about two key components, the nodes and the miners. And to me, that is just a separation of power. It puts the checks and balances in the system to ensure that miners who have the economic incentive to mine Bitcoin can't corrupt the system.
Totally.
And I think the important thing to explain to people is what is consensus, and where does that sit in this hierarchy? And because for me, that's like the most important part.
So consensus is really just a set of rules.
Yeah.
So, so there's a list. What Bitcoin does a really good job of is designing a set of rules that is governed by the code. So if you run a Bitcoin node, the rules in your node say, these are the list of behaviors that are accepted. And I'm significantly abstracting this, but this is the list of behaviors that are acceptable. Everything that deviates from this list is rejected. So the two ones that I think are critically important are the supply schedule of Bitcoins. There will never be more than 21 million Bitcoins because any rules that introduced more than 21 million would be rejected at default. The default position for all the nodes is to reject an increase in the supply. What miners do is we say, let's get even simpler. What miners do is we plug computers in. We generate computing power that gets contributed typically to pools, and that computing power is used to find a block of transactions, so a group of transactions that satisfy the Bitcoin software rule set. So the first person to guess a compliant block within the Bitcoin rule set, not compliant with some other outside thing, the first person to guess that block gets paid the Bitcoin, which is made up of the subsidy plus the fees.
And we should explain the nodes. Some people will have heard of them. A lot of people listening will know exactly where, but some won't. So the node to me is that ability that I have to download the entire blockchain and to check that every block coming in is following the rules that you've just said.
Exactly.
And the really interesting part of all of this is that the nodes keep the miners honest. Okay?
Yes.
Because we, as the operators of the system, we don't want it to break because we hold Bitcoin. It's imperative the system does not break.
And let's be super explicit about what a scenario where a miner tries to violate the rules and the node says no, and why that doesn't happen.
Yeah.
So if I'm running lots of servers, the ongoing cost of doing that is a big fat power bill. Right? We're generating this compute, but in order to power the compute, we consume, a significant amount of energy. If we were to try to propagate non-compliant blocks, and then we asked for Bitcoin in return, and the node said no, we're not getting that energy back.
Yep, and
it's use it or lose it.
And a block is now worth what? $250,000?
Yeah, it's 6.25 Bitcoin plus fees.
Yeah, so what's that? 6 times 48?
300,
nearly
300,000. 300 plus grand.
And you could have spent how much on power for one of those? Like $2 to $250,000, depending on who you are.
It really depends on who you are.
But you spent a lot.
But you spent a lot of money on power.
You spent a lot of money.
6 figures on power.
You spent a lot of money, and the incentive to cheat the system is like can I create extra Bitcoin into an account that I want? That's the best cheat that you could do, but you're never going to get away with it because the node will reject it. So it's burning money.
It's just burning money.
Just throw money away.
Yes.
So there's no incentive in the system for a miner. There's incentives for people to try and cheat. They're just never going to get away with it.
Exactly. And the cheating can't be hidden.
Yes.
Is what's important. Is that you can't, even if you attempt to cheat, it's shockingly difficult to get away with it. And this is all of, we lose sight of this because Bitcoin is part of our common vocabulary now, but this is just like fundamentally innovative, right? The core innovation that Satoshi Nakamoto offers us is a solution to the double spend problem. Mm-hmm. What that means is that if I send you a Bitcoin, I can't send the same Bitcoin to somebody else and stay within the rules. There is no workaround so that I can perform that behavior. And the way that behavior is avoided and enforced is with the relationship between proof of work and mining and nodes and validation.
We've nailed it. Should we go down the pub? No. Okay, so that's great. Look, that's a great primer for everyone. I think now let's talk about the business of mining, because this now is fascinating. Like, from a distance,
it's big business.
Like, it's huge business. I mean, how much money are miners generating daily?
I don't know daily, but it's 900 Bitcoin a day in net new, roughly. So
what's that, Danny? Give us a price, man.
Call that $4.5 million a day. Am I off a zero?
You could be. You could be off that.
Clearly, live math is not what this podcast is about.
I could do it, but like
43 million.
43 million
a day.
A day.
We're talking billions a year.
Oh yeah.
Yeah.
So this is a and you see it reflected in valuations of miners. There's publicly traded miners that are multi-billion-dollar businesses.
Hold on, was that 43 million a day? That's 1.5 billion a month.
Yeah.
Okay, big business.
Big business.
Yeah. If any of our maths wrong here now, we're all going to look like fucking idiots.
I let it out.
You can't. You'd have to leave it in. Okay, so it's big business. It's 1.5 billion a month. It's multiple billions a year. It could go into tens of billions. This is huge business. So talk about the business of mining. Like, what is the edge? Explain what Griid does. I know they're a mining business, but it's more complicated than that.
Yeah. So at Griid, we are a vertically integrated self-mining business. So what that means is we take control of as much of the operations as is reasonably possible. Mm-hmm. And we don't do any hosting. We don't mine for anybody else. We mine for ourselves because we really want the Bitcoin.
Yeah.
What that means is that we've gotten pretty smart on energy. We've gotten pretty smart on operations and construction management and software development, all of the other sort of adjacencies that make us vertically integrated. We bring all that skill set in-house. So, if I'm describing what Griid does, to someone who knows mining a little bit, but maybe doesn't know sort of the different types of businesses, is that here's the energy company spinning a turbine, and here's the chip manufacturer printing an ASIC. Everything in between is us. We want the whole stack in between. We think that that's how we accrue the most Bitcoin over time and run at the highest margin. But even more importantly, for us, the mining business is all about thinking about the downside protection case and making sure that we are producing Bitcoin at the lowest cost possible. So
you want to get the edge is getting the cheapest energy possible in the most efficient way to the chip.
Exactly. So it is about. There's really sort of two big efficiencies. One is CapEx, the other is OpEx. So on the operating expense side, it means getting the highest uptime at the lowest cost of power and the best, cleanest operational performance. So we staff it with technicians, and we run our own repair and maintenance capabilities on some of these machines. And it's all about keeping as much of the fleet up as long as you can at the lowest cost basis possible. On the CapEx side, it's really about building these mining operations as cheaply as possible without compromising on the quality of performance. So, we break that into two major legs. There's the cost of acquiring the hash, which is purchasing the ASICs, and then there's the cost of building out the operations. And so that's, we think about this on a per megawatt basis. What does it cost to stand up? A mining operation?
Right. Okay. So I'm not going to do the whole energy thing. People can go and check out the last show we did because
Yeah.
that was fascinating. But one thing you did say in there is like you did mention the cleanest. So we don't have to have a debate about whether global warming is or isn't an issue. But in terms of grid, how do you guys think about clean energy versus dirty energy? Is it a internal ethical decision, or is it a general business pressure that you have to think about this? Like, because there are some people out there. There's like, is it Steve Barber?
Yeah.
He seems to not give a fuck. Like,
Oh, he doesn't.
He's like, burn the coal.
Yeah.
And I'm not a fan of that kind of attitude. But I don't agree that everyone should be pressured to. I think there is has to be like some middle ground.
Yeah. So my mom is a huge, like, my mom didn't think I was going to. I come from a family of.
Does your mom think you're killing polar bears?
No. So my mom is like, she said this is like the first time she's felt hopeful for the future.
Oh, okay.
Was when she figured out that Bitcoin and Bitcoin mining and energy worked this way. Mm-hmm. She's a singer. She's not like a business person. This is not her wheelhouse, but she's been fed, the same kind of catastrophized narrative that's out there. And she said, listening to our discussion the first time and understanding sort of where I've chosen to dedicate my career is what makes her feel hopeful that we can solve some of this stuff.
Okay.
And so we at Griid take the approach that we are part of the solution and growth of human prosperity. So we have a couple of key theses around what that means, and we'll get to the energy piece of that. The first is that energy density per person is a really important health metric for a society. The more energy that you're generating on a per capita basis, the more access to education, the more access to healthcare, the more access to high nutrition food, all of the things, and lower infant mortality, lower of all of the bad stuff, basically, mm-hmm. that's traditionally treated this way. So we need to start from a first principle perspective that energy production on a per person basis is good. Mm-hmm. It's good for society. Now we need to figure out how to do that in a compelling and forward-looking and sustainable way. I say sustainable like the longevity of the project, not sustainable like the definition of sustainable energy. The good news is that we're going to be able to generate a ton of energy per person globally over time and not ruin our environment as long as we handle things like onerous regulation and protectionism properly, as long as we understand, how these things are engineered at a basic level, and follow that process effectively, and understand that there are externalities to having things, right? Mm-hmm. It's not just that we suck oil out of the ground to spin a turbine. Hydrocarbons are a key input in most of the things that we use on a routine daily basis. When was the last time you used plastic? Oil's in that as a key input. So, so I think that we need to have an honest conversation with ourselves about what consumption means and looks like, but also there is an abundant future for energy consumption at significantly higher levels than we're consuming today that starts to pivot us more towards things like hydroelectric and especially nuclear. That's going to get us to this incredible abundant place, but that doesn't introduce, some of the emission problems, that we face with other generation sources. I say that, and this relates back to Griid, because what Bitcoin mining does is it creates the revenue center for these types of projects to expand and come to market without needing an established, retail customer base from day one. So when you build generation, when you monetize existing infrastructure, the challenge is not just generating the electrons, it's moving the electrons to the consumers and delivering it to them mm-hmm. in a form that they can receive. So what we get to do is we get to come in and we can co-locate directly next to the generation source, no matter what that may be, plunk down a new substation and consume that energy and provide a revenue backstop that makes that generation business viable no matter the other conditions, give them the type of economic relief that lets them invest in moving those electrons more efficiently, further, and more effectively. And over time, what we're going to do is allow for more of that energy to be delivered in a productive fashion, because they've got this we think that we're like this huge cheat code for energy generators. Huge cheat code. They've never had a customer like us.
Yep.
So we come into the conversation with a utility and we say to them, hey, we're here to buy the cheapest energy you can possibly imagine selling, because we're going to be the best customer ever.
Probably need to have a sit down with Elizabeth Warren and explain this to her.
It is, yeah. I mean, I find her perspective on this like total theater, total farce. I would welcome a substantive conversation if she felt like she could offer that.
I mean, I'll give her a call after this.
Get her on here,
mate. I wish. I think it's different motivations and
I agree with
things
you
are going on there. But
and this is the thing about Bitcoin.
Yeah.
Any conversation that actually gets to sort of its logical conclusion around Bitcoin wins on the merits.
Well, this is why recently I've been saying I want to kind of like, even though Bitcoin is not political, I mean, there's a lot of political opinions around Bitcoin, and Ted Cruz has become interested in Bitcoin, and maybe it's a political angle, but it's a very American idea, Bitcoin, and it's a very Texan idea. I think there's merit in trying to talk to people who are on the left politically to explain to them the benefits of Bitcoin, because the majority of media is controlled by the left. I know we have right media, but there's a lot of left media who have very negative hit pieces on Bitcoin. And it could become a political issue during canvassing by candidates when they want to appeal to their audience. But actually, if you sell them on the benefits of Bitcoin, it's like, I've explained this really badly, but Parker Lewis said it brilliantly on my podcast. He said something like, conservatives are going to love Bitcoin, Republicans will hate it. And I think he said liberals are going to love Bitcoin, but Democrats will hate it. And I think it's a really key point, is that we can actually, it can unify the left and the right in the benefits it brings to society.
What Bitcoin does is it demonetizes the political class.
Yes.
And empowers the productive class. That's what it fundamentally does. That's what better money does for people, is it takes the people who are just rent seeking in our political structure, and says to them, I'm sorry, but you don't belong here because you don't produce anything or create any net economic positive. And it says to all of the people who are producing net economic positives, we're going to double down on you, and we're going to continue to reward you for operating within the context of this new system.
Yeah. That's a brilliant quote. I see two little heads nodded in the side, like, fucking hell, Harry. Okay, so let's talk about the ESG thing. I don't know if you saw my interview with Kevin O'Leary.
Not yet.
He brought it
up.
It's
cued.
He brought it up, and I also want to have a chat with Dan Moorhead about it, and also Marley Bent. Marley Bent, because I want to see his side. Dan Moorhead wrote a very interesting article explaining how Bitcoin is actually very good for the ESG narrative.
100%.
The thing I said to Kevin is the problem we have at the moment is everyone's focused on the E. Not many people are focused on the social and the governance, and how actually Bitcoin supports all the issues that the ESG crowd is claiming that needs to be supported. So I'm in this weird position where I see Marty Bent completely reject ESG, and I see why, and I see his point. I also, at the same time, understand we live in a state system. We have government, we have companies, they have agendas, they have things they want to do. So I also saw the Michael Saylor side, that rather than fight it, let's actually explain to these people why Bitcoin's a benefit. So I kind of see both sides. Where are you at with the whole thing?
I mean, I think that, where I'm at and where we are at Griid is that it's our job to make it obvious, right? I don't want to have a debate. I just want to build a business that makes it obviously incredible for the world. And I think we're tracking to doing that really effectively. I think we've already been a huge positive in communities that we serve, but I don't want to get tied into a knot around, is ESG the right framing? The reality is that there's $30 trillion looking to allocate to it. And if we can get some of that money into Bitcoin and Bitcoin adjacent businesses like mining, it's going to be really good for the people who've invested it. And that's what we're here to do. We're here to make obvious good decisions available to people.
And I was thinking about this the other day because when I said to Kevin earlier, I was like, yeah, but like, should we really? Because he was talking about Larry Fink. I think, was it Larry Fink?
Yeah, I'm sure it
So
was.
about Larry Fink, he controls this. He writes his note and he explains why ESG is like important. So it's now become an issue that every board room is pretty much considering. And I was saying to Kevin, like, but should we really bend the knee to these people? But just for their money. But then I was rethinking about it the other day. I was like, well, there's this whole feedback loop. Like, if we can convince these people that Bitcoin is ESG compliant, and I don't think it's binary, but if it is, and we can unleash a wall of money that wants to come into Bitcoin, Bitcoin becomes stronger, it becomes more powerful, Bitcoiners have more money, and then it makes it easier to capture or have the conversation with the political people who are trying to strive for regulation, push against it, to actually say, no, actually, like, we have the money and the funds to compete with them.
This is a key piece of the everything is good for Bitcoin argument.
Everything's good for Bitcoin.
Everything is good for Bitcoin.
You just named the show.
But it's really the truth. Like when you introduce a seismic shift in technological improvement that has the ability to improve every single person's life, then all of the decisions become very, very obvious. It becomes much easier. Who's arguing against the internet? Who's out here advocating to shut down the internet? Who's cutting fiber lines?
North Korea and China.
Yeah, exactly.
Yeah, exactly.
They, the deeper viewpoints that people have reveal themselves when you start to rub them against the grindstone that is, this type of incredible technological improvement. In this case, it's the technology of money. It's so much better than what there is previously, that the people who rail against it end up just revealing themselves.
Mm-hmm. Everything's good for Bitcoin.
Everything is good for Bitcoin.
When the price goes up, we get richer. When the price goes down, we can buy more.
But it's about changing your personal unit of account.
Yeah, of course.
That's the trick, is that helping people understand that a decision around how do you measure your time, how do you value your life, what are you here to do? How, what is the service that you can provide, to the larger context that you exist within? That's what ESG is about, right? It's a maybe fairly rudimentary attempt to say that part of the human condition is interacting with each other. We are deeply social creatures, and the best way that we can serve that biological social itch is to be part of our communities. And I think that what Bitcoin does is it removes the conflict of interest between, our biology and our society.
Yeah. Look, it's fascinating, and I am open to discussing this topic with everyone. Yeah. You know what? Some ways I should have invited Marty. I'd love to have Marty's point of view as well. I think he's got a very interesting point of view.
And I don't think it's unfounded. I think
it's very founded.
I think that his point of view is deeply reasonable, right? So and Marty's a real life friend, and he and I get along really well. But I think that his point of view here is that the ESG mandate framework is another piece of sort of the
control.
The ruling class's ability to impose controls, and that the distrust that you have for existing structures should extend to ESG, because it really is maybe a jackboot that they can put on you.
Yeah.
I'm sympathetic to pieces of that argument.
Mm-hmm.
I think that there is some social theater that is attached to it. I think that we're seeing it now as the Deutsche Bank news that's come out. There's significant fraud claims being investigated into the way that they classified and allocated to ESG. So moral hazard doesn't go away just because you put a fancy new good society label on it. So I think that we do need to be skeptical and careful when other people are imposing guides and rules and frameworks on top of us. But I also know that the Bitcoin mining industry and the way that Griid is building a business within it is an incredibly massive, obvious net positive, and we're not shy of that.
Well, this is why I refer to the Dan Moorhead piece that I read, because my conclusion at the end of that was Bitcoin is probably one of the most ESG compliant projects Yeah, if you compare it to all projects, companies, protocol, it's probably the most ESG compliant thing out there, and it's mathematically programmed to be ESG compliant. There is some debate around the E, but it's directionally heading to be more compliant. It's certainly compliant on the social and the governance side. So, like, I almost feel like we should celebrate this and say, like, you can't use ESG against Bitcoin because it's more ESG compliant than anything else out there,
Exactly. And you know,
and it can't be corrupted.
exactly. The the friction that Bitcoin has built around itself and change is so difficult to break through, you know, that it is this like, it's this unchangeable thing. It's, you know, it's
Well, ESG compliance in the future for companies will come down to how they declare how they're ESG compliant. Like Tesla may release like a report on how they're ESG compliant. Like Bitcoin's compliance is baked in mathematically.
Yeah. I think that part of ESG compliance in the future will require holding Bitcoin on balance sheet as a treasury asset.
Fucking imagine that.
Hot take.
Hot take. I take it. We were hopefully going to be joined by someone else because one of the things I also wanted to talk to you about, which I think you're about to unleash fire on, is the fee market at the moment. I follow a Twitter account that tells me, I think the next 10 blocks, what the fees are, and it's about 12 cents. I think it's 12 cents for every. You can get into every block. Mr. Hoddle put a tweet out the other day saying there was something like 349 TXs in the mempool, and some people have been having the discussion about there's not enough fees being generated yet for the miners, and we should just outline what it is to people who don't understand. But the miners, as you said earlier, they receive the block reward, but they also receive the fees every time they solve a block. But over time, Bitcoin is designed that the block reward reduces, and 2140 is when the block reward ends as it is. I mean, we'll be long dead. But at some point, fees should or will need to overtake for miners to be able to provide security. So the concern that people put out there is that Bitcoin is not being used enough, and not enough is being generated in fees. This is a risk for the future. I'm often receiving emails asking to discuss this. Many Bitcoiners go, it's not a problem, forget about it. Other people are like, well, we at least need to have the discussion. So tell me your position on this.
I think it's important to talk about how mining revenue has changed over time and do a little bit more of a historical analysis rather than this is not a point in time question. This is a historical trend line question, and this is a future projection question. I think that, you know, the way that we look at it right at this moment is it's not a problem. You know, we just talked about it. Miners are generating $1.5 billion a month. Mm-hmm. You know, and irrespective of where that comes from, that's a really big revenue number that justifies a whole bunch of electricity spend. It justifies a whole bunch of security assurance as to the functioning performance of the network. You know, point in time, no issue. Mm-hmm. Let's talk about historically first. Historically, we are generating more mining revenue today than we were when there were 50 Bitcoins per block. Why? Because the purchasing power of a Bitcoin has appreciated significantly. So we need to have a perspective on what is the future purchasing power of a Bitcoin. There is a very reasonable case that in the future, the purchasing power of a block with 1 32 of Bitcoin per block subsidy is going to have more purchasing power than we're getting out of 6.25 Bitcoins today.
Yeah, let's go with 1 Bitcoin for the sake of math. Let's say it's $1 million of Bitcoin. Mm-hmm. That means we're generating how many blocks a day? I'm trying to. What was our 43 million calculated, Danny? Danny on the math. So how many blocks is it a day?
So it's 6 times 24.
6 times 24.
144.
So 144 million. So yeah, that would be enough at the time, but that wouldn't be a trending up at that point.
Correct. But the problem is that the unit of account that people are talking about is not the purchasing power of Bitcoin. They're talking about the fee level over time. So what we need to do is think carefully about what do you think the future purchasing power of one Bitcoin is going to be?
We just don't know.
And we just don't know.
Yeah.
The second piece is that if we were seeing fees dramatically higher on a per transaction basis, I would have worry about the development of the multi-layered approach to Bitcoin that all the different open source contributors are taking. So if we fast forward into the future and we've onboarded 1, 2, 3 billion people to Bitcoin and they're all using it, they're not settling on Bitcoin base chain. We need to have the opportunity to develop a significantly robust infrastructure that sits on top of the base chain of Bitcoin to be able to handle the transaction throughput that level of economic actors needs to be able to use. So Lightning, I'm a very significant Lightning bull on the way that the Bitcoin economy is going to continue to come to market. I love seeing low fees but high transaction volumes on Lightning. I think that type of dynamic is an incredibly, incredibly positive indicator, because the more of the economy that you can migrate into Lightning, the more channel openings and closings there are going to be. What is a channel opening and closing? It's a Bitcoin base chain transaction. So, I would rather see 1 billion people on Lightning than 50 million people trying to congest on Bitcoin base chain. If we see congestion here, I want each of the Lightning channel openings and settlements to have some enormous associated layer 2 economic value, because that's how you justify a higher price of settlement on Bitcoin base chain. And so it's about building out this multi-layered approach that can handle more of the global economy. And then we can start to see the fee migration towards the real settlement layer, which is going to be Bitcoin base chain. If I'm going to go buy a house, I'm not sending a Lightning transaction. I'm sending something on Bitcoin base chain in the future. There's also an argument that I think that it goes by Alex B on Twitter.
Yeah, nice.
Alex is great. He's got a lot of thoughts on this as well. Sometimes I agree, sometimes I don't. But he's got this vision that we're going to go back to bigger than 50 Bitcoin blocks in terms of mining revenues. That the demand for base chain settlement is going to be so large that we actually haven't mined the most profitable in Bitcoin terms block yet.
That's interesting.
Isn't that cool?
Had a coffee with him recently. He's a fascinating character.
Fascinating.
Yeah, really interesting guy.
So thoughtful.
Yeah, really interesting guy. Okay, that's interesting. So, and I guess we can never answer the question, how much security is enough security?
We keep paying our power bill. That's all I can. That's the most informed answer I can give you on how much security is enough. We can model it. We can look at it. We can do all of these kinds of twisting ourselves into a pretzel about enough, or fear mongering about it. But the point of Bitcoin is that it abides by the rule set that we talked about at the beginning. There's 21 million of them. There's not going to be any more. We don't need to introduce a 1% inflation rate, in perpetuity. When I send a transaction on Bitcoin base chain and I get the confirmations of additional blocks, each of those blocks is another wall built around the security assurance that the transaction I sent is never, ever, ever changing. This is the fundamental property. And if what we've done in exchange for what we've really done as users of this software is we've bought those assurances with some uncertainty around when and how the future state of fee revenues is going to mature. It's a fair trade.
Yeah. So really the answer to this, some people say it's concern trolling. I don't think it is. I think it's fair for people to be able to ask the question, and it's great to have you answer it so eloquently. But the point of this is that we don't know the answer until we see the problem, and there is no problem.
Precisely. And if you're really worried,
yeah,
and this is the call to action here. If you're truly concerned about the future state of fees, build a service or a technological platform or some sort of business that utilizes Bitcoin base chain and pay fees to me.
I think it's really fascinating how Lightning has grown in this last year. And I will attribute some of that to what's been going on in El Salvador, because It's become a total use case for Lightning. Like, I was there recently, and I can't remember the date, was it 9th of September? I could go to any McDonald's or Starbucks in the entire country, and I could buy a cup of coffee or a cheeseburger and pay on the Lightning Network. It fucking astounds me that happened. It astounds me it happened that quick. I mean, these companies who aren't Bitcoin companies have become Bitcoin Lightning companies quicker than some of the companies within our ecosystem.
Yes.
Like, I think it's a fair call out to some of the exchanges. Like, why are you not supporting Lightning? Starbucks are. And they did it and it worked. I mean, the Starbucks one is hugely impressive. Walmart wasn't there, but it's coming. But like, Lightning is now a thing across the entire country.
And like, I think Jack Mallers gets a lot of credit.
Yep.
He deserves more. Like, the idea that you can interact with Bitcoin as a settlement rail and not take on Bitcoin risk in terms of price for short-term transactions. What?
Yeah.
It's, good technology looks like magic.
Yeah.
Strike looks like magic.
Not to Wells Fargo. No, Western Union.
Western Union, aka the vampire sitting on the throat of the internationally disadvantaged.
Yeah. Oh, how do you do it, man? Honestly, we're going to have so many clips from this. Sitting on the throat of the internationally disadvantaged. You know what? They put 50 ATMs out here in the US. The Bukele government. Do you know this?
No.
They've put 58. There's 200 of those Chivo ATMs in El Salvador. They put 50 out here in the US. So the Salvador, and they put it where all the Salvadorans are working to send money home to their family. So they've now got free. They could basically route around Western Union, and they can send money back free to their family. And not only does that save them the Western Union fee, but it also gives them an incentive to send more smaller amounts back. Here you go. Here's $20 for my son, so we can go to get a burger with his girlfriend. Like, it's incredible. That entire system's been routed around. I am short remittance. I'm like, if I could short these companies, I might have to look at it. I would short the fuck out of them because they are screwed. Once people start realizing this,
you are short remittances.
Well, I am because I'm on Bitcoin. Yeah, but it's truly incredible to see that growth in the Lightning Network. And yeah, massive credit to Jack Mallers. Also, I go one step back. Massive credit to Michael Peterson and Bitcoin Beach. That was the seed of this project in El Salvador.
No doubt.
Now we watch and observe. I don't know how much is going to be used in El Salvador. It might be an initial burst and slow down and come back. But the fact is, we have Lightning as a national settlement within a country, like in a sovereign country. It's incredible. The other interesting thing about that is, I wonder what head office in Seattle, Starbucks, is looking at going, we just rolled out Bitcoin in a whole country that quick, and we have instant final settlement of a currency, and we have low transaction fees. I wonder if there's, because I know they're meant to be doing something backed. I don't know how long why it's taking so long when it's coming, but yeah, same with McDonald's. They've integrated into those screens. You know the screens where you go and order? Mm-hmm. You just go up and order and you choose to pay in Bitcoin. It's fucking insane.
And we have to understand that, like, all of that credit card processing is like 3 or 4%. That money is just freed up now. This is why good technology is deflationary over time, right? Better technology, lower prices. Better quality of goods and services at lower prices, right? Human flourishing is not rocket science. We just need to realize that we need regulators to not stand in the way of good innovation, not at the cost of consumer protection, but there is just so much good to be had that integrating these things does. Everybody who now buys McDonald's got 4% back over time. Inflation gets passed on to consumers, so does deflation.
Yeah, well, look, it's fascinating. I'll tell you another really fascinating bit. So I'm like leaking something out from my conversation with the president, but he said, because a lot of people challenge the Article 7, they're like, I spoke to a lot of people in the country, like, we don't like this being forced on us. And I asked him about that, and he said, look, I've got 5 banks in this country, like billion-dollar banks, multi-billion-dollar banks. He said, they are legally obliged to provide banking services with Bitcoin. You can go into the bank and any of their services they have to provide with Bitcoin. He says, if I don't put this law in place, they don't do it. And that's really fascinating because the banks now in that country have to support the technology, which could ultimately make them irrelevant. I thought it was fascinating. It blew my mind.
There is so much to the El Salvador story that I don't know how to process yet. I think that the president is sitting at a crossroads.
Yeah.
Where he can go down as the most progressive and forward. I say progressive like capital P, forward thinking leader in an area of the world that has not had someone with the ability to change things as much as he has. He could also look like every other small market dictator.
Yeah,
that we've seen.
I'll tell you about it afterwards. I basically said the same thing. I said to him, "You could be El Salvador's greatest ever president. I mean, he can fuck it up, but I think it's pretty obvious that this is a more than one term job.
Yeah,
and that's the challenge. That's the real challenge. It's how far does he go? But there's a lot to watch and be interested with here.
And Bitcoin doesn't care.
Yeah,
and
with a note of warning, I think we have to watch the moves he makes, and I think certain things that people have been raising, such as Alex Castillo, is important to raise those points. But let's go back a second. Within 3 months of announcing, you have nationwide coverage of Lightning in that country. It's better for people who live there. It's better for their relatives who don't live there. It's better for people traveling into the country. It's good for investors, and it's good for the companies that are there. It feels like a win-win for everyone involved.
Bitcoin is obvious.
Yeah. Everything's great for Bitcoin.
Everything's great for Bitcoin. When people are presented with the reasonable, rational, facts-based arguments as to why Bitcoin is good for them, it's very, very hard to take the other side.
So listen, before we do go out and eat, because we're going to go and eat and have a drink and have a proper catch up, there's another thing I want to talk to you about, because when we got into the room, you started talking about pools. I thought that's super interesting. I told you who I'm mining with. You told me you think the pool industry is going to change. Just for everyone listening, explain what a pool is, and then talk about the things you explain to us.
Yeah. So the way that pools work, and this is a good kind of, if we go the full cycle from mining 101, we start with this is why mining is important for Bitcoin conceptually. This is the mining business. You buy energy, you buy ASICs, you build places to put the ASICs, you plug them in, you run them over time, and you generate Bitcoin. We talked about where that Bitcoin revenue comes from, both subsidy and transaction fee. But there's another mechanical layer to the business model, which is that you're not just spitting this computing power into the air. The primary way that the computing power is used is by contributing it to a mining pool. There's a number of different pools that are out there. They're based in different places. They run different models. Some of them are working under different umbrellas. So Binance has a pool, DCG has a pool. Pool and an F2 pool are out of mainland China, and they run some other businesses, but their primary business is just being a pool. Luxor in the U.S. is a pool that's designed to just be a pool business. So I think that the traditional way that this has happened, Slush, the first pool, invented sort of the technology and methodology of aggregating hash into a single location. The way the pool business has been historically is that they take a slice, 2.5% of all of the Bitcoin that gets mined through their pool, and that's how they generate revenue.
The reason you might explain the reason I mine in a pool because I've got 5 machines. The chance of me finding a block isn't a rounding error. It's pretty much zero, right?
Exactly. So the reason that you aggregate hash into a pool is because otherwise you may never see the revenues.
Yeah.
Right. You have to find a block on your own. You're competing with hundreds of millions of other terahashes all around the world. And so if you don't happen to get a block and get lucky, you may never get any revenue. So what a pool does is it aggregates all the hash together, smooths the revenue across all of the participants pro rata relative to how much hash they contribute. So let's say Pete and I formed a pool together. He's got 500 terahash, and I've got 1,000 terahash, and we mine 1 Bitcoin. I get 2/3, he gets 1/3.
And the great thing for me is actually I know what my daily energy cost is, and I know how much Bitcoin I'm mining every day, and it's just a very easy calculation. This is profitable. I should carry on.
Exactly. It's both a software that helps your business, but it's also like your little business analytic dashboard. The pool business historically is fee driven. They take a cut along the way. My opinion is that, and this is I think we've already started to see movement in this direction, is that over time, pool fees are going to fall to zero, and then they're going to fall negative.
And we'll come back to negative, but it trends to zero because there's the cost of moving pool is
very,
easy,
very minimal.
So if I'm paying 2% here and someone offers me 1.5%, I may as well move where my miners are pointing.
Yeah, exactly. There are some performance metrics that you want to track and make sure they've implemented the software well, but overall, it's really a kind of a price game.
Yeah.
The trend has been, so maybe we were 2.5% or 3%, and you'll see in some other proof of work chains the fees are higher because there's less competition. We were maybe high 2s, we moved into mid 2s, 1s, and now we're trending sub 1% in fees at some of the larger, more mature operators. If you're a miner at scale, retail mining probably has a little bit more fee challenge, but over time these are going to trend to zero. Super competitive environment, super zero sum, service 1 versus service 2. So what's going to happen is that the demand to have miners as customers is going to become so great that you're going to have to either continue to drop fees all the way to zero, and I think they're going to go negative, because the businesses that interact with Bitcoin and Bitcoin miners are going to have so many other services that make money. So if you think of like an LTV calculation, lifetime value of a customer, let's use McDonald's because they've integrated Lightning, so we can reward them with some free advertising, like they need it.
Yeah.
McDonald's doesn't make very much money on a burger. They know they're going to make money on the fries. They're going to make money on the drink. They're going to make money on the apple pie. And so what they do is they cut costs even towards negative on the burger. If you ever heard the term lose money on the burger. Binance has a pool. DCG has a pool. Why? Because those mining customers use a bunch of other services. We interact, we are financial actors within this ecosystem. We might want to liquidate Bitcoin. We might want to hedge. We might want to borrow. We might want to lend. All of those are significantly higher margin business lines than running a pool. And so having us as customers in their ecosystem is going to become so attractive that as time goes on, they'll pay us to be there. Other things that interest me in the pool business are folks like Poolin or F2 Pool that are out of China. They run their own self-mining operations. And so what they've done is say, okay, we can offer competitive pricing because we've basically bolted a pool on top of our own mining ops already. Folks like Luxor, who I think are really interesting. I'm friendly with some of the guys over there. They are building like a full-blown hash exchange. So they believe that hash itself can be a commodity that can be traded because there's a pretty easy conversion rate between hash and Bitcoin. Because if you contribute 100 terahash for 1 hour, there's a Bitcoin equivalence in Bitcoin mining revenue associated with it. So it becomes another commodity to trade in parallel with Bitcoin. That's another interesting way to do it. But in my opinion, the pool piece of their business flips negative.
The thing is about this, it all points to the direction of the maturity of this industry. Like the levels of depth to this industry are way beyond anything that someone like an Elizabeth Warren is thinking about. She thinks, I've got a political argument here about environmental waste. She doesn't actually understand everything. This is like more than any other interview I've done. I would love her to listen to this and understand. Like, she is talking about a subject she has close to zero understanding of. Like, I have close to zero understanding when I sit with you, and I learn so much. But I think this just speaks to maturity of the entire ecosystem.
Yeah, Nassim Taleb, formerly great thinker,
Fucking moron.
currently disgraced charlatan.
Plonker.
Yeah, Plonka has a term, called IYI, intellectual yet idiot.
Is that for himself?
Now he applies, but he used to roll it out for people who have a lot of opinions but are not practitioners, and I think unfortunately this applies frequently to the academic class and the political class because and we talk about this all the time at Griid that we're not a Silicon Valley startup. We're not moving fast and breaking things. We're not writing code to attract the next billion eyeballs. What we're trying to do is build core infrastructure for the monetary network of the future. That needs to be done with incredibly high reliability, incredibly high attention to safety, both physically and also cyber. This is a heavy construction business. This is we build these in middle America and rural areas. This is not we're not creatures of the city. And so that's built into sort of our corporate DNA. Forgive me for my New York City lifestyle, but but we're building this heavy industry, and in the same way that fiber has to travel through the towns you've never heard of to get to the place where maybe you're consuming it. The backbone of the Bitcoin network, the broad scattershot of miners who are contributing hash, to the Bitcoin network, are cast far and wide. They're the beating heart of the communities that they're serving in and operating in. They're huge energy customers, which you can say, well, you're consuming and you're not doing anything productive. But every dollar of revenue that a Bitcoin miner buys from a utility is an additional backstop for the individuals in that community not having their prices go up. And so there's this tremendous force for good. We bring fiber to remote locations because we need it.
That's a really, really great point, actually. Is that co-locating miners keeps energy prices down
100%.
for communities.
Yes.
And again, that's lost in the conversation. It's like seen as energy waste, but actually it's making energy more efficient.
And more affordable.
Yeah, more affordable. That's a really, really interesting point.
And these are places that have, we brought on he's frankly one of the mentors to me in our company. He's our VP of energy management. In 27 years at a utility, the power contracts that we were looking to source, there were only 3 that he ever looked at in 27 years that were bigger. So to give people a sense of what this means for a small utility, it is life-changing for the trajectory of where energy prices are going to go in that region. And so we do provide this incredible economic backstop, but also bring fiber to more remote locations. We bring connectivity there. It's just a force for good. And
Yeah, I know. Right, listen. I want to finish on telling you why I got back into mining, and a lot of people ask me why I'm mining rather than just buying more Bitcoin. And I want to tell you my logic, and I need you to tell me if it's sound or I'm a fucking moron and I should have just bought more Bitcoin. But so people know that I tend to have this rule that it's 8 weeks business or personal cash flow in the bank. The rest goes into Bitcoin. But I scaled that back a little bit as we're kind of mid-bull market. Like I'm being a bit more considerate about my Bitcoin purchase. I'm still acquiring, but I do have to run a business. And even with like 8 to 12 weeks cash flow in the business, most of the time I'm well within my float. Like it's just sat there as cash. That cash is doing 0 for me. Well, I know it's losing me money, right? We know UK inflation is 3.2%, probably higher.
Thanks, Boris.
Yeah, thanks, Boris. You fucking... no, Rishi Sunak is the other guy you need to blame. Yeah, everyone blames Boris. He's the very rich chancellor. Yeah. Anyway, so the point being is that I've got cash sat there in the bank doing nothing. It's actually losing value. It's losing purchasing power. Mm-hmm. So I could just put that into Bitcoin, but if I have a sudden cash need because I don't manage that float well, which actually happened recently, I had to sell a very small amount of Bitcoin for a short period of time. Because my gap between invoicing and payment ended up being longer than I thought. I rebought the Bitcoin, it's fine. So I got through that. But I operate with a higher cash float now because of that. But when that cash float's just sat there, say it's $50,000, that can float between 50, 150, whatever. I can take 50,000 of that. I buy 5 S19s. The S19s, that hardware has value, and it tends to retain its value or go up, okay, because it's a Bitcoin derivative. But it's a much more stable price than Bitcoin. So what I get to do is I get to put my money into an asset which holds its value, which is also earning me a return. So I think of my miners as my bank account earning me an interest. So basically, rather than leave the cash in the bank, I have miners in a facility.
Mm-hmm.
The cash in the bank earns me no interest and is losing value. The miner's generating me Bitcoin. So essentially, I've earned $5,000 interest this month with it being held in miners. Okay, because I've got the Bitcoin that I've mined. And if at any point, like I have a cash crash, I know I can sell my miners probably for more than I bought them now. Does that logic? It's a more stable investment in Bitcoin than just holding the asset. Does this make sense?
It is not the dumbest thing I've heard.
But that's not kind. That's like imagine when on a date. It's not the worst date I've been on. You're not the ugliest person I've had sex with.
Hope I am. But so I think that your use case, the best thing you could do is not keep any of that cash. Is not worry about having to keep any of that in cash and taking and having an undrawn revolver for your business, right? Like if I were to be your put on your the Pete McCormick CFO hat for the day, I would say I would go talk to a bank, get a line of credit, don't draw on it, and then when you need the cash, you've got available balance to be able to borrow. It's going to cost you like whatever 4% when you draw it, but you just pay it right back. Right, so you're only drawing it for 30, 60 days at most, kind of deal. So having that's just a good thing to have in a business, right? Is have an undrawn revolver. The use case that you're doing is really about if you had to sell the machines, not what price could you get for them, because I totally agree with you. I think that hardware in this market right now, especially the S19, really retains value quite well. It's about how quickly you get them sold. And how quickly you can get that cash in hand. If you have a Bitcoin, that's liquidated and cash in hand that day. Getting a miner processed and sold and making sure that you're able to sort of match that trade, there's a little bit of liquidity risk. If you need the cash same day, I think you'd struggle to get it.
Even now?
Not even now, but
maybe in February.
And there's friction, right?
Yeah.
The wire doesn't clear. It's an international wire. They're not sending you Bitcoin. There's stuff happens. And so I think that you need to consider the liquidity piece of it carefully. But in terms of a productive use of cash, no brainer, right? Your rate of return on that should be
it's 100%.
100% a year.
At the current price of what would that be? $5,000 I did. I mean, I know the price is going to trend down.
Yeah, you'll decay over time.
Will decay, but also the price of Bitcoin might go up. But like, my machines should be paid for in a year.
Mm-hmm. Yeah, so that, call that 100% rate of return.
Yeah,
that's the real DeFi. It's decentralized. You're computing. You're just contributing hash. Like you're getting an APR that's unheard of in traditional markets. Like. Plus, you have an actual asset that's on the books, that's a value, that's not going to get rugged or hacked or smart contract ruined.
So I want more machines.
Yeah.
What's the problem with the market right now? Is it just down to the chip shortage?
Yeah, I think I think that there's some supply availability stuff. I think it's a lot easier to go after miners if you're a scaled operation rather than kind of acquiring at the retail level. Compass does a great job.
Yeah.
But I think that the crunch right now is around infrastructure. Even more than chips. I think there's probably more ASICs than rack space.
Oh, interesting.
If I had to guess today.
Interesting.
Especially, somewhere between the China shutdown and some of the supply chain stuff around electrical infrastructure. And just like, it's hard to build things. This is the thing that I always try to come back to with the mining discussions is like, this is a physical infrastructure business. There are people with backhoes and concrete and electricians that are much more part of my daily life than any banker or any software developer, right? And so that's really where the business gets managed more closely, is around, we have construction, construction project management that is a core of what we do. And so it's important to remember that like all of the great benefits of something like that are associated with mining. Also the challenges. It was raining. We couldn't pour the concrete. That's a normal problem. So, these are things where I think that it's really easy to talk about, hey, we're going to go build a 100 megawatt data center. That's really hard. like I hope that they pull it off, but that's the number of people on earth who are able to pull a 100 megawatt Bitcoin mining facility off. That's not a long list. The people who have done it, that's a super short list. The people who are in the midst of doing it, who are going to complete it successfully, also not a super long list. It's a really hard infrastructure project to get to happen. And then to run it clean, afterwards, is challenging. And for you who have your machines parked in a rack, of what one of those operators is doing, I think you benefit greatly the more maturity comes into the infrastructure piece of the business, where you as the hosting customer through Compass, you get to see the benefit. But like with every great business, the harder it is to disrupt.
Yeah. Well, listen, man, love talking to you. You know that. You're one of my favorite people I've ever met, and you are permanently welcome on my show. I think you're criminally underfollowed, but I think you need to. I don't think. Well, you've tweeted more recently. I've noticed an uptick, but like, just love everything you're doing. Come on whenever you want. Keep crushing it, and let's go and get some food and a whiskey.
Thanks for spreading the good word, sir.
Right,
Thanks
man.
for having me.
Anytime, brother.